Hi everyone, today I'm talking about 3 UK stocks to buy in the month of May 2020. As always guys, smash that like button and comment down below the stocks that you're looking at buying in the month of May. I'm always interested in looking at the stocks that you guys are buying. There's been some really good ones on the last few videos that I found really interesting as well. So please keep that up guys, and I'll show you guys the 3 stocks that I'm looking at buying in May 2020. So all 3 stocks on this list I have already bought. I bought the shares in this stock. I bought them all on about, I think it was Monday actually. So I did buy all 3 of these stocks and add them into the portfolio, and I'll be doing my first UK portfolio reveal or look into it probably towards next week, somewhere just after the 28th, so I'll show you all them guys. But let's get on to the list, and number 1 is Greggs. So I think everyone knows Greggs is a classic bakery shop, the king of the sausage roll. They have many stores all the way around the UK, and they have been opening up more and more stores as the years have gone on and doing a really fantastic job of managing the company. The ticker symbol for this one is GRG. They're currently valued at £17.93, which according to Simply Wall Street is 40.6% undervalued, which is good. They've also been on a little bit of a discount recently as well. They've just shut some stores down about 3 weeks ago, so they are not operating at the moment, so just bear that in mind. But this company offers some really good EPS growth. It also offers some fantastic revenue growth. The previous performances over the last few years have been fantastic from Greggs, and 2019 in particular was a fantastic year as well. A lot of this growth has come from more stores opening. Last year they opened up 138 stores, and they also closed 41 stores. Now because of them closing stores, 41 stores, I feel like that's a really good move for management, because it seems like they're not happy just opening up stores and leaving them open. It seems like they're looking for better locations, or potentially stores that are underperforming or not in the correct area from stores that they might have opened up years ago. They're starting to close them down and move into better positions. So it also looks like to me that management are looking at fine detail about the store locations. They also opened up a new centralised supply chain. Now what that means is they're able to control a lot of their products and making the products and distributing it, and because of that it takes costs down a massive amount. So that's really benefited Greggs as well over the last year. And also there's been a new vegan menu implemented. I don't know if any of you guys saw like the massive demand for like vegan sausage rolls, but when it did happen, everyone was like, oh my god, have you tried the new vegan sausage rolls? And there was a little bit of a craze about it. So the new vegan menu in 2019 did really help sales. And as well as that, it was really good PR because everyone was talking about it. Now, because of the supply chain that they were able to implement, and also the vegan menu they put in, that helped existing sites revenue grow by 9%. Now, obviously, I don't know if it'll grow by that much in 2020, but that is really good growth for same sales. You know, you wouldn't say a 9% growth in existing sites in many other kind of industries, so that was a pretty nice growth overall, and hopefully carrying that on to 2020 will also mean that Greggs have a really fantastic 2020. With this one as well, you do get a dividend. It's a 2.59% dividend, and it's got a low payout. Obviously, just be careful. I got this a few days ago, like if they are paying a dividend and they're not operating, they might cancel the dividend. Okay, it makes common sense for them to do that, and by the time that I've recorded this video and I've edited it out, there's a chance that companies do cancel the dividends. I cannot predict what a company is going to do with their dividend when they're not operating. They can turn around and cancel it, so please be careful of that. And if you are buying a company that I'm mentioning, please do your own research and look into them. I got that, I think, 2 comments the other day on a UK video that I did about the dividend yields and them not being correct. I cannot update them after I've recorded, so please do your own research and make sure it's all up-to-date information. Now with that out of the way, the CEO is buying shares, which is fantastic, and there's a lot of shares being bought in the company as well, which I really like when I see insiders in the company buying shares, because it kind of signals to me that even they think it's undervalued and they've got probably the best kind of information around there to know what is going on with the company. So yeah, insiders buying, especially the CEO, which is the one I really look for. I really like seeing that, so that's fantastic. And when we look at the balance sheet as well, what a balance sheet, a clean balance sheet, no debt on the balance sheet. And you know, I like companies that have no debt. It really makes me confident to invest in them, because if anything happens, I know they can get through a lot of bad sticky situations. So that's another great benefit with Greggs. And number 2 is 888 Casino, which was featured on the 5 UK dividend stocks to buy, the last UK stock video that I did, and I have bought this one as well on Monday. The ticker symbol for this one is 888, and since 2008 this stock has been on a massive slope downwards. It is on a big of a discount, and also with the coronavirus that kind of knocked it down, but it did have a little bit of a spike not so long ago, because it was seen as one of those companies that was still going to do well in this kind of situation, because it makes a lot of its revenue from the gambling side. Sports betting only makes up a limited amount of its revenue, I think something like 16-17%. So that made a lot of investors move to this company. It is valued at £1.40, and according to Simply Wall Street, it's undervalued by 32%. It offers some good EPS and revenue growth, and where I see myself making money in this company is by expanding internationally. Over the last year, 2019, it was looking at moving international, and it's moving to a lot of European countries. It's also eyeing up the US, which is definitely a hard market to tackle, but it is also moving into Europe. I know it's looked at countries like Sweden, Portugal, and expanding into them sort of countries has really helped their growth. And going forward, that's where 88 Casino is looking at moving to expand that EPS and revenue. So that's where I see the growth in this one. It does have some slight debt on the balance sheet, but it's still not too bad. It's got 100 million in cash, which is quite healthy as well. So overall, that balance sheet doesn't worry me too much. It does offer a little bit of a dividend as well. The dividend is currently at 3.4%, and it also offers a low payout ratio. And this is probably one of the companies that I think will be okay to still pay the dividend, because obviously they're still operating, apart from the little sport betting segment. Obviously that's not happening right now, but most of the revenue, over 80% of the revenue, is still coming in, and that might even increase with a lot of people being at home and looking for something to do. There's no insiders on this one, so no one's buying, no one's selling, which is fine. And like I say, with this one, I think it's a quite a nice little stock to pick up. I think it'll do quite well. So I bought 88 Casino as well, and we'll have a look at number 3. So number 3 is Legal & General, which was a stock that was really close to making my 5 dividend stocks to buy. And if I had 6, I could have potentially put it in. Maybe I could have put it in over actually one of the other companies, but Legal & General's still an interesting play right now. Legal & General is in the financial services. The ticker symbol is LGEN, and this one is actually still, it's a value play. We're looking in at this one as a dividend play, and it actually still paid its dividend. It got a little bit of a grief for paying that dividend, but at the moment it still paid that dividend out, and them paying the dividend actually made like a few news articles. A few people weren't right happy about it, but like I say, it's still, I'm looking at this as more not as a growth play, because the growth isn't huge. It's more of just picking up that dividend really, and it's valued at £2.05. According to Simply Wall Street, this one is 58% undervalued. It does have stable EPS growth. The revenue growth is a little bit everywhere, but the EPS growth is fine. That's what we want to look at for this one being a dividend stock. The balance sheet is okay. It's got 13.9 billion in cash, so nearly 14 billion in cash. In debt, it's got 5 billion in debt, which is a little bit high, but obviously it's covered, so that's totally fine as long as we have that debt covered. That's the main thing. It offers an 8.55% dividend yield, so obviously with that share price going down so much, that dividend's gone up. And it also has a history of growing this dividend, and I think like the forecast wise is that by the year like 2023, this could potentially be a 10% dividend yield for me. So that's a really interesting aspect of getting it into this stock. As well as that, it does have a low payout rate on that dividend, 58%. So that's also something that really helps it, because when I'm focused on the dividend, I want to know, is it going to be able to play it? Is it going to be increased, and how safe is it? And the 58% payout rate is pretty good. And also the one thing that really helped me push across the line with this one is I looked at the insiders, and there's loads buying this company, and a lot of these people are in quite high positions on the board as well. So to see so many insiders loading up of Legal & General, that was fantastic. So that was a really positive sign as well. So guys, those are the 3 UK stocks that I'm going to be buying in May 2020. I'd like to put Hollywood Ball, Barrett Development, and maybe Dark Group on this list, but them stocks have gone absolutely huge since last month. They're up big time, so I couldn't really do them again. So I've gone for these 3 this month, and I hope you enjoyed it. As always, if you could hit that like button, subscribe if you haven't, let me know which stocks you're buying, and I'll see you in the next video.